Gold price are going up on H4 time frame because Fed will reduce their rate hike size in next FOMC meeting. Previously, they were doing 75 basis point rate hike in each FOMC meeting and gold was coming down. And Friday it again ignored NFP number because everyone knew as a macro trader in upcoming month soon NFP either will go below 100k or negative because negative NFP means recession. So market already know this truth and they already buying gold. And another interesting thing which happened last week which changed everything because people are still thinking that it will go down make new low because last week FOMC member were talking about raising inflation target because right now everywhere you will see in news that target is 2%, but next year they will raise their target, so new target will be 3 or 4%, and that single information changed everything because slowly Fed will decrease their rate hike size, then they will pause, then after they will start cutting interest rate, and next year in fourth quarter somewhere near December you will see rate cut. So in first attempt it could not break this resistance zone 1786, but this is its second attempt and now it will easily break that level on FOMC meeting. Then after breakout next target will be 1880, and before that you can see rejection at 50% retracement of this complete bearish trend at 1842, or there is a possibility it can make a sideways correction near 1800 level then bend upside because now main focus is next FOMC meeting. And last week when Fed sound dovish it went up, so you can expect if Fed repeat that monetary policy tune in FOMC meeting then it will jump more to upside. So current level from 1786 to 1807 is your resistance zone, and now price is breaking their resistance level. If we see downside correction then 1730 can be your support level, and upside target for bulls is 1880 level. But daily time frame this complete trend has been ended with triple bottom and a new bullish trend has been started. So after a clear breakout by a daily candlestick of 38% retracement level, there is a no stop before 50% and it can go up to 61% retracement level. So there is no big selling opportunity before 1896, and between these two level 1807 and 1730 you can expect a sideways correction, and only key event is now next FOMC meeting. And before that, first of all on Monday we have PMI number, and these are best thing for macro trader because sooner or later all of these PMI number will come down below 40 means recession, Then on 13 December, we have most important thing right before FOMC, the CPI number. Because last jump in gold price which changed everything was started in big drop in CPI number, and now it goes up or down is not as important like before, because first big drop has confirmed that inflation has peaked not just in USA but Europe too. And last week Fed speech made confirm that now Fed risk from inflation is now changed to over tightening. So if CPI goes more to upside, then terminal rate can increase, but next FOMC will be 50 basis point rate hike. And if comes more to downside, then gold will jump more to upside, because last week again PCE number came down and they are now at 5%, which is your terminal rate. Then in the last we have Fed FOMC meeting where Fed will give signal how high interest rate will go next year. So this year price will not make new lower low, but everything depends next year. And if you see weekly time frame, then this complete price action which is based on coronavirus monetary policy, first it went up when government were giving money by stimulus check, that was creation of inflation 2020. When in last Fed made confirm that no more next level of Fed QE monetary policy, it came down. That was the time when hedge funds were dumping gold and buying stocks. And this was the spikes when people came out of lockdown and buying gold, like country from China and India, and both are famous for their gold sentiment. And in the middle, when Fed said 2021 that inflation is transitory, when they were ignoring inflation, so that was sideways correction and last spike because of Ukraine invasion. And now current year, when Fed is saying that inflation is a risk and Fed started QT monetary policy, but you can see gold price is still sideways. It is not making new low on weekly time frame, because this is the stagflation. So next year 2023 will be recession and everybody know. So Fed is already giving signal before year start that now they are raising 50 basis point and slowly 25, then no rate hike which we call Fed pause. Then after 2 or 3 months they will start cutting interest rate. So that bearish trend based on macro trend is ended. And most important thing, because next year nobody will buy stocks as a professional money manager, and gold will be number one choice because it is stagflation. And after 6 months from now, when there will be recession visible everywhere, this speculation will start. The interest rate will go again to zero, that Fed will start QE or not. And most important thing which happened last week, again I am telling, that Fed will raise interest rate target either 3 or 4%. And if they raise target 4%, the entire game has already changed. They will stop hiking interest rate after 5%, and after that comes rate cut, which is beginning of QE. So new bullish trend in gold has already started, and if you forget everything and focus as a beginner trader on simple support and resistance, then these two level, first of all 1805, which is our nearest resistance, and price is testing second time. Once is breakout, next will be 1880, and if it's come down, then support will be 1730. But next year it will hit 1880 level. And China lockdown all of a sudden, like a surprise, are ending, which means Chinese people will buy more and more gold. So these buyers were already buying before this official news, and now this is real. And for intraday trader H1 time frame, this is your wave count, wave A, then wave B correction, and now we are in wave C, and these two are your support level 1732. Below that level, if price go, that is again a buying opportunity.